Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the slightly late running, my apologies, slightly late running Bull versus Bear webinar here on Thursday, the 11th of July. Steve Miley here on the call for trade day. Welcome, everyone. I'm going to go for our usual regular run through in here today. Not much to say in here. Market's bullish yesterday, as we flagged, as we expected. Those bond markets still haven't broken out. We'll take a look at those shortly. And obviously, all eyes in now 57 and a half minutes on the US CPI data. So good morning. Let's get going. Good morning. Good morning, Jim. Good morning, David. Good morning, Ben. So let's take a look at the calendar first of all in here. This morning, we've had some UK data in here. GDP data slightly better than expected. Industrial production slightly worse. Manufacturing production right in line. Given the GDP number was higher than expected here, putting back chances of a rate cut, an early rate cut in here from the UK has seen the pound significantly higher this morning versus various currencies of particular note in here. Up in here, just taking a look in here on another chart that you can't see. So the pound's up. Where is it this morning? Up. Oh, it's only up 0.2 in here. I thought it was up more than that earlier on. It was a good day yesterday anyway, and continuing higher, so not particularly much higher, but pound slightly higher in here on the back of that. What else do we have? So the main focus obviously all on CPI today. Keeping a close eye on that. That's just up in now 57 minutes in here. Keeping an eye on that core CPI number and the headline CPI number. Expected at 0.2 on the core, on the month on month, 3.4 on the core year on year. On the headline data, 3.1 on the year on year and 0.1 on the month on month. So certainly keeping an eye on those as we go into today. The other thing just to mention, we've had earnings kind of kick off with PepsiCo. Not a big move in markets. We're more looking into the financials tomorrow. These do come before the bell, so we may have some of these out before we come on the webinar tomorrow. Probably not many, and they're usually about an hour to 90 minutes before. So maybe just as we're coming on the webinar, these will have been released. So I want to give you a heads up before that. But PepsiCo out already. You can see in here beating slightly on the EPS and missing very slightly on their revenues in here, but all eyes on the financials we get into tomorrow before the opening bell. You can see that on this column in here. I'll share this calendar. We would get this into but you can't share this widget, unfortunately, into the other widget we had that we looked at there, this earnings calendar. That was also from investing.com. But we can insert this one into the trade day site, but we can't insert this one, the earnings calendar. Should I have another look at that, see if they've got that available? But last time I looked, it wasn't available. But nevertheless, you can come into the site in here, investing.com/earnings calendar, earnings dash calendar. JP Morgan, Wells Fargo, Citigroup, Bank of New York Mellon. Yeah, we're looking at the EPS focus. And I have this filtered, by the way, guys. It's just so you know. I have it filtered, so we just have the US. That's what kind of interested in, and then tick the 3 stars in here for the most important, because if you don't do that, you'll get loads and loads fall into here. We're really only looking at the ones that potentially could impact the indices, okay, because most of you guys are trading the indices, so, and certainly these big ones here. And we're also looking in here, you can see the market capitalization. It's sorted by market cap. We're looking at the bigger companies, and obviously going to have potentially more of an impact. Let's move on to Bloomberg's 5 things to start your day. So just quickly, if you're new to the webinars in here, let me just put a new tab in just where I go to get this from. So if you go to in here, Bloomberg Markets. Okay, even if you don't subscribe to Bloomberg, a lot of these articles you can't get. If you click through, you need to have a subscription. You can see I'm logged on. I have a subscription. But over here on the right hand side, the most important market news of the day. You can put your email address in here. They send out 5. You can see the one in here. Sorry, not 5, 3. You can see, look, Americas. There's one for the Americas. There's one for Asia. One for Europe. So these come out in whichever time zone you register in. So whatever when you register, it picks up what clock you're on, and then whenever you register, it will give you the overnight report. So this is the one that's just come out more recently. So we go back to that. You'll see it's been out for 11:30. That's my time at the moment, BST. It's now 12. This has been out 1 hour, so it kind of gets put out in the early morning, whichever time zone you are in. So you'll receive that into your inbox, so you don't have to come searching in here in your each day. You'll get this exact what you see here. You'll get this in your inbox each day. So it's worth signing up for. So you go to bloomberg.com/markets. I'm sharing the link underneath right now, and then you put your email in here, and it sends you that 5 things to start your day for your time zone. So let's go back to that 5 things to start your day. Slower inflation. US inflation is expected to moderate in June, so focusing on the CPI data. So that's what we've already gone through. What we're expecting. Investors are growing increasingly concerned that US technology makeups are spending too much on artificial intelligence. Well, they may be, but then that keeps pushing the AI boom even further, and that continues to go, as we saw yesterday with Nvidia hitting new highs again, dragging the tech stocks with it, dragging the Nasdaq with it, dragging the broader market with it as well. Traders are no closer to finding clarity in the US election landscape. Joe Biden facing mounting pressure to withdraw. That's only going to continue to build, expecting even further more. Expecting further Democrats, maybe in senior positions, to give him a nudge as well. Apple agreed to a settlement on its mobile wallet technology, whoever providers free of charge. The money-making trading formulas for Chinese quantitative hedge funds are disappearing. Nothing's really impacting us. Even the Apple thing, really not a big deal to us in here today. Right, what else we've got? Live Squawk in here. This is the news service you get below where you are. There's 3 columns. On the right-hand column is the news. Middle column is the macro fundamentals that we put out on a weekly basis, and then the left-hand column. But nothing really is the technical analysis books. Nothing in here from the European briefing, Asian stuff on the overnights in here. Nothing in here really to. I just wanted to point it out for anyone new on the call. US future staying holding pattern. No surprises there. We're kind of just sitting there, having had that strong day up yesterday, but TSMC shares also at record highs in here. Again, chip sector, tech sector, AI pushing markets higher. Traders are waiting inflation data and looking for how that's going to impact particularly I think the bond markets still remain important. Morning bid from the similar thing as 5 things to start your day. This is from Reuters. CPI caution sees no barrier. Sterling surges. Well, sterling didn't surge that much. I don't know what's getting sterling surges in here. Sterling surges. Let's have a look. I don't even see where that is in here. But anyway, we're not so bothered regarding the currency markets anyway. But we also have futures edge lower though, slightly lower ahead of the rally testing inflation rally, and Nvidia in here leading Nasdaq and S&P to record high closes yesterday, and TSMC also doing well. No real changes here in the Fed Watch tool. We will be watching this, how it changes through CPI in here. Why is that loaded like that? There we go. When it loads. So if here, obviously no expectation for a July rate cut, but we go to September now. And we'll see we're up at this has been hovering back between 25 and 30% for unchanged. This has actually got a little worse for the doves in here, so this is actually a little higher than it was. It's been down to closer to 25 with about between 70 and 75% chance of a rate cut and 25 to 30% chance of no rate cut. And if we go to the end of the year, which is like the other area we're looking at in here, there's still about here, look, you see less than 25% chance we don't get that we only get one, and now over 75% chance in here, or around a 75% chance, sorry, that we get one or two rate cuts in here. This is 2. So this here is obviously 2 rate cuts, and this is more than 2 rate cuts. So 2 rate cuts or more, we've got a 75% chance. So we'll see how that changes through the CPI. A quick run through the global exchanges with the US up strongly yesterday. We're up nearly 1% on the overnights on the Japanese Nikkei, up over 2% in here on the Hang Seng, the Hong Kong index. index. European exchange is slightly better this morning, between 2 and 3 tenths higher across the UK FTSE, German DAX, and the French CAC. And on the overnights, having had that strong day yesterday, the Nasdaq and the S&P kind of marking time, slight dips, about a tenth lower, but not much really considering the surge we saw yesterday. I want to focus here on the bond market again and these yields, because even though we went significantly higher yesterday on the US equity indices to new record levels, once this eventually loads, you'll see we're still in that holding pattern on bonds. Bonds have just gone nowhere for the last about basically 4 sessions and into today, having had that big push lower last week to lower yields. Okay, this is the yield chart, remember, and we've been marking these levels in here. So we've got 421 and 419, these important levels on for lower yields. If we do break lower, if the CPI number is better being cooler than expected, lower than expected, if CPI data is lower than expected, we could easily see us break down to these levels. So on yield terms, this is, remember, the 10-year yield, by the way, US 10-year. Okay, on yield terms, the two levels to watch are 421 and 419, breaking through there. If we go and take a look on the US Treasury markets, on the actual futures, in here, we go to the 10-year. I mean, 10 year is really the benchmark we're looking at. If we go to the 10-year, I've been flagging this high up here at 111.01. And if we actually go to the charts in here, where we'll see, that's the stock indices. If I go to the chart again, remember we flagged, there's the 111.01, but even ahead of there, this is the equivalent level of the two levels. So 111.01 is the 421 level. The 419 level equivalent is that high there, which is at 128.5. Okay, so you're watching out for that one. Why is the data box not showing? Oh, there we go. 110.28 and a half. Okay, is so 110.28 and a half and 111.01 for the US 10-year future, the two levels you're looking at. Looking at the indices in here, we obviously pushed up to and through some notable Fibonacci extension levels at record highs in here. These are the only real targets. We're going right up and nudging against some important levels on the Nasdaq. The Nasdaq are probably more important levels to watch. So watching these levels on the top side, some of them in the vicinity in here, and looking to challenge those going into today. Should we get should we get inflation in line or softer? I would suggest. I think we're going to see stocks up and bonds. If bonds break through those levels I just flagged to you, we could really see equities take off again in here. Yesterday I said we could easily see a 1% up day. We got that, and you could easily see another 1% up day on the S&P and the Nasdaq if the CPI at all points in the right direction. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. I'll be back with you tomorrow for the final TGI Friday Bull versus Bear webinar of the week. Until then, take care, stay safe. Helmets and goggles at the ready for about 45 minutes for that CPI data release. Please remember, I'll throw this in a bit late right at the end. Please remember, no trading 2 minutes before or after the data. No trading 2 minutes before or after the data. No trading, no orders in the order book 2 minutes before or after. Have a good one, guys. Helmets and goggles on. Bye.